Thank you everybody for making the time to come together and listen to our experts on the world of crypto. We have some very good local experts. First, thank you to Coinme for sponsoring the pizza in place.
Woo!
You want to do a plug for Coinme, Nathan?
No, just glad you guys could be here, and really, our private client team is really focused on helping on-ramp, off-ramp education, learning more about digital currencies and how it interacts in the real world. So I'm happy to talk to all of you afterwards.
Awesome. And then another special thanks to Stably and Kaylin, because they're going to be helping us share these stories. It's really great that these interactions and sharing happen, but we also want to get other people involved and let them be aware that we have a community here that's really good, and we meet face to face. We're here to, get to know each other as people and not just as, Facebook friends that message together or Twitter friends, right?
Or poker friends.
Oh, poker friends too. So it's really important that we do that. So thank you, Stably, for investing in helping us share those stories. So as soon as the video is ready, we'll release it and we'll appreciate shares and igniting other people to get involved and show up in person, because it really is, all this stuff is really awesome, but it's only awesome if people adopt it and it's helping people, right? So we have to make sure that we don't forget that it's really easy in technology in Seattle to be like, code, product, and there's other people too, yeah, right? Mm-hmm. So I'll let the speakers kind of introduce themselves. We have Kory Hoang, CEO of Stably. You want to do the Stably plug and introduction of yourself?
Sure, definitely. So my name is Kory. I'm the CEO of Stably. Stably is a local startup in the fintech crypto stablecoin space. So we got started in April 2018. We raised a total of, I think, 1.7 million in total venture capital funding so far. And in the past year and a half since inception, we have managed to launch our own US dollar-backed stablecoin, achieve a market cap of about 5 million at the moment, which make us, I think, 6th or 7th largest in the world in terms of USD-backed stablecoin. And we're also working with other major brands now that have much larger network effects than we do to issue their own brand of stablecoins. So we're moving into the stablecoin as a service space at the moment, and also providing borderless banking and financial transaction capability for our end users. So yeah, we'd love to talk more about what we do and take any questions afterward as well. Shout out to Kaylin for being the camera person for the whole event.
And we have our video from the last event about a month ago that we're about to share, so you'll get to see the style that'll come out. And hopefully be proud that you're a part of the storytelling. Jesse Proudman, CEO of Strix Leviathan.
Yeah, so I'm Jesse Proudman, started Strix Leviathan in January of 2018. Strix Leviathan started as a software company building institutional grade trading tools for systematic funds in the space. And then we launched our own hedge fund in April of 18. That's our primary focus today. So we trade based on the momentum that exists in the space. And yeah.
Cool. And we have Matt Heater, who's also part of the Strix Leviathan team.
That's right. Matt Heater worked for Jesse, joined the team in April of this year. So about a year after fund launch, focused on investor relations and business development.
Cool. And last but not least, sorry, Englishisms get screwed up. Brent Lyman of Coinme.
Brent Lyman. I'm with Coinme. Hired on about just over a year ago to help launch the private client team with Coinme. I'm one of the senior advisors here. I use the word expert. Definitely not an expert. I learn every single day, and our goal at Coinme and the private client team is just to share our knowledge with the retail customers. We're more on the retail side. Coinme is very simple. We've got our kiosk network, personal kiosk network that we grew, and then we partnered with Coinstar in January because we realized to scale that network, it was going to be much easier to do it on the back of somebody else's network. So we're basically progressing. That's been progressing. We're up to 3,000 machines almost, and so we're basically focused on getting licenses in the rest of I think we got about 18 states to accomplish by the end of the year. So we'll be across the United States, and with the push of a button, we're able to light up those Coinstar machines. And then we're looking at additional markets right now with additional licensing and partnership. And then we've got the PCS team. In the PCS team, we've got institutional clients, we've got individual clients. Really, we're just an on-ramp, off-ramp. So if they need to buy or sell into US dollars or out of US dollars, we're a simple solution there. When you deal with Coinme, you actually deal with a human advisor. So, if you want to get away from the exchange platform, or and you want somebody that you can actually have a little bit of interaction with and learn from,
I can just text you.
You can just text me. You can do all kinds of things. So, whatever communication channel you prefer, that's really what our focus is 80% of my day spent just educating customers. Really, our customers are the adopters that are coming into the space right now, where some of us own crypto and we've understood hardware wallets for a while, or we can build institutional tools and we got a cool stablecoin, but not a lot of people know what a stablecoin is. And so that's what we're explaining, and that's what we're educating on.
Cool. And since it's a relatively small group, I think it'd be really great to have everybody introduce themselves a little bit.
Good idea.
Maybe take 30 seconds to a minute. How about we start that way?
Sure. Hi, I'm Jim Simmons, COO of Round Block Capital. We are newly NFA, National Futures Association regulated, introducing broker, specializing in crypto futures.
And Coinme, Nathan, our client team here. So.
I'm Richard Bristol and run Bristol Advisory, tech consulting across multiple industries. Most recently, been working in real estate and blockchain. So I've been interested in learning more.
I'm Zone. I'm not in this field. More interested in blockchain technology than the coin itself.
I'm Mark Staron with Tibet.io. We provide the simplest solution to get into blockchain, specifically EOS, because people can exchange right on their Twitter, Telegram, or Discord. And we're focused on supporting the communities. So we support 40 different EOS tokens. So when somebody has that EOS token, they use our platform for rewarding their community or distributing it. We call doing a tip drop versus an airdrop, which is kind of like spamming in a sense, where this is more like rewarding your community for being involved.
I'm Shobit. I'm head of markets at Cryptseed, which is a blockchain app development company. And so we're focused on rapid development of enterprise-grade solutions, mostly on Hyperledger, but also Ethereum.
Josh, I also work at Coinme. I handle trading for the private client team.
Jill Williamson. I'm an attorney at Gravis Law. I do a lot of business law stuff with a heavy concentration in corporate compliance. I work with Stably and a couple other cryptocurrency companies, particularly on MSB and money transmitter and sanctions and all the most interesting parts of what you guys do. You count on me to do the boring work, but that's really my forte.
Cool. Well, thanks for coming and your introductions. Does anybody have dying questions that you'd like to ask before we get started? No? All right. So maybe we could start with a broad general statement around crypto and the angst that a lot of people are feeling today. A lot of people are saying the crypto market is like the bear market. So we're in the bear market in 2019. It may change over the next 2 months. It may not. How does it feel like to be in the bear market today? And are you feeling still optimistic and powering on in your day-to-day work? Who wants to start?
I think it's an interesting classification to call this a bear market. Like 2018, markets dropped 80-ish%. The broader market is measured by sort of top 10 by market cap weighted index. This year it's up sort of 60%. So all things said and done, we're not necessarily in the same economic climate we were a year ago.
Oh, so it's not a bear market.
August or September of last year was everybody was really down and dire. But I mean, you like Q1, Q2, there's a pretty material recovery. I think that the challenge is that recovery hasn't sort of kept its legs. And these are markets where so much of the interest is driven by price movement. And so because the price has pulled back over the last 4 or 5 months, that sours interest, that sours participation. But to some extent, I mean, year over year, the markets in general, the crypto markets are up. I'm not sure I'd classify it as a bear market. We'll see what happens in Q4, but
So not so bear market, but for the retailer or the person, mainstream media, the dialogue is around bear market and Bitcoin's under, I think today it's at like 7,500-ish. Oh, whoa, what do we do? Should I buy or should I sell? So that's an interesting point. How about you guys? Bear, not bear?
So I guess the thing that we focus on is, what is your goal with if you're purchasing Bitcoin right now? What is your goal? Are you using it or are you investing in it? And if you're investing in it, what is your time horizon? So it's important to have that discussion. So if it's short term, yeah, you can say we're in a short term bear market. But I think long term, I think things have never looked better. I think you look at the fundamentals of the Bitcoin network. I think you look at the fundamentals of the amount of money and talent that has flowed into the infrastructure. It's only improved. And now, we've got what I would say is close to tier one infrastructure coming into place where you've got established exchanges, established companies. They're bringing on their own products into the market. One of my investing theses is super simple. If you go to an RIA right now,
What's a what?
registered investment advisor,
Oh, okay.
and you say, hey, and that RIA has, I don't know, let's say $50,000 of your money, and they're investing it on your behalf.
Mm-hmm.
So they have fiduciary duty. At the end of the day, they have not been given any tools or any, I would say, direction from their investment options or investment committees to say, okay, if you have a client that comes to you and asks for cryptocurrency or Bitcoin, this is what you have supposed to say. Instead, they're telling them not to do anything. And I think some point in time, if the price continues to do what it has done over the last, especially 5 years, there's going to become a moment where clients are going to be pretty frustrated because that RIA is going to be what's considered out of fiduciary duty. And so, when I look at the market, I just look at the fundamentals right now because it's just super young and there's just so much money being pumped into the infrastructure. And once that infrastructure really sets in, especially in the institutional side, I think we're going to see some of that demand come in. But this is a retail-driven market. And right now, in my opinion, you might be able to provide more information on this, but to me, the derivatives are really driving the spot price right now. And spot's kind of in a dead zone, and I think that's why we've seen the drops. But you still got a good year. We're up compared to January, so is that a bear market? I mean, I'm happy with the performance this year so far.
Really? You're happy?
Absolutely.
I mean, it's all timing, right? Like
Yeah.
if you bought at $20,000, you're upset. If
Yep.
you bought at $3,000, you're thrilled. So, I think your point around investment strategy is really key because I think because this is a retail-driven market, people sort of stay out until the mania sort of evolves or populates into the broader conversation, and at that point, sort of the price has already established itself on a parabolic trajectory, which always pulls back. I mean, what we're seeing now is a pullback from the parabolic move in Q1, Q2.
Yeah.
How far that pulls back is anybody's guess, but it's like a long-term investor uses those opportunities as entry points, or benefits from those parabolic moves. Like you got to think about the momentum that exists in this space. When you talk about, you mentioned earlier that this space mirrors commodity markets. Like that's 100% what we believe, and we're working on a research piece right now that talks about how really simple momentum strategies in this space return significantly better results than just a passive index or a buy and hold approach. And we think that exists, or one of the main reasons that exists is because these markets act like traditional commodities markets.
Herd mentality.
Yeah.
And when you talk about infrastructure, what does that consist of? Is it like the futures or?
Yeah, exchanges, access. I mean, if you go here's a perfect example. I've got a good friend that runs a family office, and he uses Fidelity or TD Ameritrade as a platform. That's where they get paid from with the money that's sitting on there, and then he invests it. He's the CIO, but he really, with the funds that he's working with, and a lot of them are qualified retirement funds, he has no way to really even expose his investors into Bitcoin without buying into a fund or taking that money off the platform and having it in-house with somebody else. So that's a challenge.
Right.
So here's a person that I've been working on him personally because, we've been trading together for 25 years.
Wow.
And he understands it, but there's a fiduciary duty there that he has to really think about first, because while he's focused on returns, he's also focused on minimizing drawdowns. So it's just, there's a challenge there with the infrastructure that's in place. And as the Fidelities and the major brokerage houses have solutions for the family offices, for RIAs, for as we've got ICE now that dipped in and they have created an incredible product. It's not seeing any momentum yet, but really an institutional product, in my opinion, needs 6 months to at least maybe more like 12 months to really gain any momentum. So just things are new, and as all this infrastructure gets built and piped, it's going to be interesting to see if it really does take hold.
So all those major players are kind of starting to build out their infrastructure to support
Yeah.
cryptos and things like that.
Think about like when Coinbase first launched their app. Did they have a lot of momentum? No, but they picked up big momentum in 2017, a few years later.
The RIAs also have perverse incentives, though. They're compensated on capital that maintains itself on their platform, and by far and large, any access to the space is not on platform. Maybe GBTC
Yep.
from Grayscale, maybe, and you're paying a city of your premium to participate in that.
Yeah.
But outside of that, everything is either bought like direct at retail exchanges or in funds, and the RIAs don't get compensated for that. So not only are they saying this is a risky asset class and I may get skewered for having huge drawdowns from a recommendation I make, but I don't get paid to make that recommendation. So what we've seen is that the only interest that you sort of get is when people go to the RIAs and they say, look, here's the thing I'm considering, give me your opinion, and then they have to force the conversation through. The RIAs aren't making a recommendation here.
No.
I want to get Kory's feedback on bear market, not bear market. How are you feeling in this crypto non-bear market?
I guess two aspects. One is price, and the other is actual fundamentals. Like Brent said, is the actual progress and building, right, happening in the community. Price-wise, I think we're not in a bear market anymore. Like Jesse said, we had good price appreciation this year, and I've actually seen a lot of, retails or just friends of me that are actually, talking about crypto again, kind of like early 2017. So, I'm seeing signs that it's not similar to what happened in 2018 when everyone was just like, oh, Bitcoin's going down, there's blood on the street. And, the people that should be wondering if I should invest in crypto were just scared away by that, right? This year's a little bit different. On the actual fundamental side, I think, ever since last year, there's been a bull market in that, no doubt. There's companies that's building infrastructure from Strix Leviathan to Stably to even larger companies like Facebook, right? Or even Walmart or, banks. There are a lot of banks out there that are now officially adopting blockchain technology within their operations, and they're using that technology to either help settle transactions, or they're thinking about creating new line of products that offer to their clients that involve blockchain technology or cryptocurrency. So overall, I think we're in a good space. And again, when compared to something like the internet, because to me, I think crypto is the internet of money, right? Compared to the internet, I feel like we're in 1994, 1995 for crypto right now. which is, back then in 1994, 1995, the internet, it was there, but it hasn't really became really widely adopted and popular among most of the consumer yet. That still took another 5 to 10 years in order to happen. And I think, we're similarly in the crypto space, we're at a very similar position at time. We have major institutionals and investors and a lot of capital coming into the space to build product and solutions. And the user experience is getting better and better over time, right? So at some point when there's enough money in the space and the user experience gets there, then I think mass adoption will start to come. And whether that's next year or 3 years from now or 5 years from now is anyone's guess, but I would definitely say it's less than 10 years from now. So it's definitely coming soon.
I've heard the argument about internet many times, but to me, it seems like the number is moving backwards versus forward. Like when I first got into crypto a couple of years ago, it seemed like we're internet 1996, and now, but it seems like it's going 1994, 1993, 1992. What do you think of that?
Well, both of us had different idea of where we were back then, right? So we kind of had to get a common consensus on where we really are and kind of judge the progress. For me, from what I've seen, is we've gone from just decentralized, a decentralized tool of sending value, which is Bitcoin, to programmable smart contracts, which allow us to not only create programmable money, would also allow us to create decentralized application, right? And then the utility tokens, of course, or what you call the shitcoins, came out in 2017 in mass, and we are now evolving from that. We learn the industry and the whole world kind of learn the experience from that. Does that utility token model really work out? Some people will still say that it would work out in certain conditions. Most of us have seen what happened, right? The token goes down a lot in price. It doesn't really get integrated into the ecosystem. So we move on from that model, and now we're moving over to stablecoins, right? And stablecoins may provide that perfect solution that everybody's looking for in a cryptocurrency that the shitcoin didn't provide. And now we're seeing brands like Facebook and Walmart and who's know what other big brands going to come out with their own cryptocurrency or stablecoin. And these ones they're going to have additional features, utilities, benefit built on top of them because they're programmable money, right? So I think we're moving in the right direction, and slowly we're gonna hit the point of mass adoption. But again, my mother or my grandmother have no clue what even a Bitcoin is, right? So, and if like you said, if they wanted to buy or invest into that, it's very difficult for them to do so, and there's no easy way for them to do that. So until the infrastructure is there and the means to acquire cryptocurrency and the application of cryptocurrency in general, until all that makes more sense, then mass adoption will come. It's probably a few years away. So
yeah, I feel like the crossing the chasm is very deep and very long, it seems, for this industry, because you're talking about such a huge opportunity, trillions and trillions of dollars on the money side, and then all the application possibilities and things like that. So I always think about what's going to get us across the chasm.
We get asked that question, and my answer has always been, I think we're pre-AOL. I'm old, I'm bald, and I remember when the AOL disc came out, and you got them in the mail, and that made it easier for middle America, because that's where I grew up, to get on the internet. So have we had our AOL moment? I don't know, but I don't think we have personally. And I think when people are able to get access to it and use it, and it's super simple and it's very secure in their mind, then you'll have that quote unquote mass adoption. But right now, everything you hear about is hacks. Heck, Binance, which is, pretty quality and a very aggressive startup, then I think someday they'll be studied by Harvard and some kind of business review of how far and how fast they've come. But they've gotten hacked. So it's people don't want to hear that. this mass adoption that we talk about. I mean, go to Roll America and ask people about Bitcoin. They don't know.
But I can't even convince a single friend that's already in the space.
So that's the challenge. Like, so what's the AOL moment? What's the moment where, okay, I just need to plug in this disk and this helps me get on the internet?
But why did people buy in 2017? I mean, they bought because the price was going up. Like,
Correct.
There is no
There's no utility.
there's no utility.
It's speculative.
There's no utility, and particularly in the U.S. Like, we have a financial infrastructure that largely works. Like, it may be a pain in the butt to send a wire, but you can do it and it works. Versus if I hold all my money in a stable coin and I lose my private keys. Like, being your own bank sounds great on paper until you lose all your own money. Like, this usability issue, I think it goes beyond just how we interact with these currencies on a day-to-day basis, and it's at the core of the technology itself. Private key management is a fundamental challenge with this space, and trying to educate the broader population about.
They don't want to hear it. They don't care.
There's no interest.
They don't, and that's why banks have existed. Banks rose for a reason.
Which is ironic now. So you talk about institutional infrastructure. Like 2 years ago, there were no qualified custodians to operate in this space. Like, to register with the Washington State DFI as a RIA trading these assets, you have to use a registered custodian or qualified custodian.
Mm-hmm.
That didn't exist 2 years ago.
But isn't Coinme a registered custodian?
We have a partnership.
Yeah, they have a partnership. So that now exists. There are now a number of players that exist, but that's effectively now you have some third-party entity that's holding your assets. So you've just created another bank.
Yeah,
just
Okay,
the
so
blockchain.
this is a great point, and this is my biggest, the inner Bitcoiner, this drives me nuts. 18%. If you look at GPTC as an example that you brought up earlier, if you look at Xapo, if you look at which just was bought by Coinbase, if you look at BitGo, if you look at the major custodians in the space, 18% of the supply of Bitcoin is in centralized hands right now. And I know, so we've taken a digital asset and we're buying military institutions that are buried deep underground so that we can secure ones and zeros. Okay, that's a little ridiculous. So it's just super interesting, and that's my concern is like, are we just building what we have already
on the blockchain?
Yeah.
But everybody can see us building it.
Well, we got to go back to the fundamentals, right, of why we're even building things on the blockchain in the first place, and then maybe addressing the question like, why are we taking something on the blockchain, putting it back onto custody off-chain to secure it, right? Why does that even make sense? So I think it boils down to, and this is just cryptocurrency in general. I'm not talking about blockchain. I'm talking specifically crypto. What are the benefits of crypto to the average user? To me, it would be four things. First of all, it's fast, right? You can send a Bitcoin or a stablecoin to anyone in the world within like minutes, and they'll receive it, depending on traffic network congestion and all that. But generally speaking, it's a lot faster than sending a wire to like China or whatever, right? It'll take 3 or 5 or maybe even 10 business days to get there. That's the first benefit. Second is cheaper, right? If you send a Bitcoin or Ethereum token or a stablecoin to someone across the world or to another wallet, it costs a few pennies, right? In order to do that. Now, to do that with regular traditional means, it's basically, it doesn't scale like that, right? The average remittance cost is globally is 2 to 5%. And, meaning if you send $1 million or more than that, or a couple $100,000 or tens of thousands of dollars, the cost, it scales up with you. Whereas with cryptocurrency, again, it's just only a few pennies per transaction. So it's faster, it's cheaper, and the third most important thing about it is open border. It's borderless, right? Meaning you can send it P2P to anybody in the world. As long as they have internet, they will be able to receive it, right? And that right there is something that we never really had before, right? Something that can bypass capital control, something that can completely doesn't need any intermediary centralized authority to process that transaction, and it just be done on a blockchain.
Fourth, most importantly, is programmable money. You can program extra stuff onto it if you want to. What kind of extra stuff? Maybe we haven't crossed that chasm yet, right? But I'm just thinking out loud here in the future, right? Do you want privacy? We can program that onto it. Do you want cashback, discount, rewards or something? Maybe I can't provide that, but maybe a store or a brand that I partner with can provide that onto, your cryptocurrency for you, right? Or do you want the cryptocurrency to pay you interest or dividend or something? Again, I may not be able to do that, but a bank that does this or a corporation that pays dividend, if it does this, then that cryptocurrency can do that.
Programmable time locks. That's one of the neat use cases of being able to lock funds up for a year, 2 years, 10 years, and then they're released programmatically,
Exactly.
all digitally.
So
Like escrows, yeah.
Can I interject here? So when we're talking about mass adoption, and your fourth point, programmable extra stuff being very important benefit of crypto, it's also one of the things that's stopping the adoption of crypto, at least from a policy side, right? So when governments or centralized authorities look at crypto, they've only been applying their policies to transactions. But now we have transactions that are not transmitting value and something extra, like in the world of utility tokens especially.
Mhm.
And so they're going like, I cannot compute. I don't know what that means. Like, do I care about this, or do I care about this, or do I care about this? And so, and that brings me to my, there's 2 points off that. So if crypto is programmable, what if one of the best ways to get to mass adoption and also sanction blessings from the governments if we use blockchain to adopt a contingent settlement mode? So hey, you care about us not doing transactions with bad guys, so let's program that in. If you're like a known terrorist, well, anybody that uses this free open source library thing, I'm not a coder, so I'm making up tough words, but like if I use this library and I input it into all transactions that my business does, and I just won't do it with these known terrorists and bad guys or these sets of rules, what if we use that as a way to get mass adoption? It's programmable, one of the great benefits of crypto, and it helps regulators help us all.
So you're essentially potentially proposing that we track every token so that whoever holds it would be a good guy and not a bad guy.
Well, I haven't thought that far. It's just,
Is
there a way to do this?
There's one step in between there, and it's something that I talk about a lot with crypto from an anti-money laundering standpoint, is that all of anti-money laundering regulation and compliance efforts are focused on people, not accounts, largely because traditional banking system happens behind closed doors. And so I don't get to see what happens, like what behavior this account has undertaken, right? I only get to know who purports to control that account, and I only get to manage my compliance risk with respect to the person who purports to control the account. On the blockchain, you get to see what wallets do. And so, but the regulation says you're supposed to control for people, not for wallets. So these open source libraries, the SDN list that says who all the bad people and entities are, they only have like 2, maybe 3 wallet addresses listed.
Right.
And those wallets aren't sanctioned. Those wallets are just identifying factors for you to take into account to see whether you're doing business with the bad person.
Right.
So you can do business with a sanctioned wallet. That's not illegal. You have to justify why you think that wallet's not associated with the person. That's a different issue. But the wallet itself isn't subject to sanctions. The wallet's just like an address. It's like saying this person born on this date whose last known address was this.
Right.
It's a way of triggering, a review, if you will.
Right.
So first we have to move the regulation to think about wallets and accounts, if you will, instead of just people. Because and it's been a flaw in the regulation forever. I mean, because you always have straw people setting up accounts that are on behalf of others, and you can't control for that, right? You can only control for the person who says, "This is my account."
Right.
So that is the missing piece in your idea of let's, program. I think I'm just a lawyer, not a technologist, not a coder. It seems practically technologically possible, but other parts of the system aren't caught up yet.
Accounts and wallets, not people, is what we need to
And people, maybe.
evolve the regulations or policies to look at. Right now, it's only people and transactions by people.
I think to build on
An
that,
entity.
those laws that the KYC, AML, I just read they were 99.9% ineffective, despite all the billions and billions of dollars. So
The most that the most effectiveness I think that they provide, and there's a difference between like sanctions regulation, which is a prohibition on doing business with anybody on a particular list, right? Or KYC red flag. And I think the most utility that they provide is if you see a red flag, you report it. And so then the government develops a large database from which they can crunch and analyze and look for patterns and do investigations and launch, criminal, prosecutions. It doesn't necessarily prevent, but it does create a store of knowledge for the government. But that isn't always then filtered back out in a way that then you can take it into account in your further, KYC reviews.
I mean, not to take us down a rabbit hole, but this whole industry creates all kinds of regulatory issues in the fact that, like, coins can be sent and mixed with other coins. Like, you take coins from the OFAC list address, an address on the OFAC list, and you send it to Coinbase, and then I withdraw from Coinbase.
Ooh.
Like, are my coins now? They've been tumbled with those coins.
Yeah.
So now do I hold tainted coins? Like, there's no regulatory clarity. Sort of how many steps back, or there's limited regulatory clarity. You could speak to this more intelligently than I could. But I mean, these are the issues that this type of technology creates that haven't been thought about.
But it also creates the traceability.
Right.
Yeah.
So it doesn't have to be tainted because it's not commingled. It's still separated. You can
Right.
still follow the chain all the way back, right?
Until it hits a
Until it hits
Until it hits
exchange.
and omnibus it.
Yeah, I mean,
Yeah.
in theory, someday,
Right.
just like dollar bills, what do they say about like $20 bills or $100 bills is that they all have like cocaine residue on them. In theory, all Bitcoins will have eventually gone through some wallet that is associated with a bad person or entity.
Money launderer or something.
So you do need to come up with an approach that accounts for that, because as they circulate, they circulate. And they circulate amongst people who aren't subject to the same laws, and therefore do transactions with those wallets, and then they continue to circulate until they get back to the US or other countries that do regulate. And it doesn't mean that they're tainted.
Yeah. At the end of the day, cryptocurrency or stable coins or digital money in general, is more transparent than cash, right? Like, when you use cash, dollar bills, you go to bank, they KYC you there, you deposit, they KYC you, you withdraw, they KYC you. But outside of that, right, it's P2P. Like, I hand cash to Jesse and Jesse can sell me like whatever and nobody would ever know about it. If you move that into crypto, at least now on the blockchain, there's a trace. So is it as private as cash? No, not at all. Like, as a matter of fact, Bitcoin is actually, if you are a money launderer or a drug dealer or like a criminal, I wouldn't use Bitcoin. Whoever used Bitcoin recently for that, that one website?
The John
We were-
Ross, I think.
Oh, that
Yeah.
guy.
No, not that guy, and someone recently that just got busted for. I read a news article. It was some big criminal website that got busted because they were using Bitcoin. And
Was it
reg-
porn? Was it child porn one?
Oh yeah, that one. Yeah. So
Things
that got
that were shutting
busted,
down.
and that was because they traced down the Bitcoin on the
them off
blockchain.
the
Yeah.
street.
That's like,
Yep.
There,
So-
was there was a time that the
Of the
US
traceability.
government was the single largest holder of Bitcoin.
What? Really?
Because they seized it pursuant to
Oh.
criminal activity.
Oh.
It was all due to forfeitures and seizures because of money laundering.
Even more than
So are
Satoshi.
they keeping it?
They eventually auctioned it,
Auctioned it?
probably before it went to like 20 grand, if I recall correctly.
No, it was Draper got that.
Yeah.
Draper got it?
Yeah.
Nice
Wow.
job, Draper.
Yeah, they auctioned it the same way they auction, all
a stolen
seized
car or a seized
and
car.
forfeited. Yeah.
Okay, so then we just finished this, Bitcoin is traceable, so if you're gonna do bad stuff, don't use Bitcoin, use cash. We're generally positive. We don't think it's a bear market. We think it's a pretty positive market that we've been in 2019. I want to hit.
Doesn't mean a bear market can't come, but
Yes.
Yes.
but this year has largely been
Good.
good to the industry.
Yeah, it's your time frame.
Yeah.
This week's bad.
Right.
It's
Yeah,
still good.
and you might be able to test this a little bit, but I think most of the major moves in Bitcoin, it's just a few days a year. I
It's a
don't.
few minutes in those days.
Yeah, it's these crazy parabolic moves that it does in like a few hours versus, if you look at the day-to-day moves, it doesn't move a whole lot. So
Is that all like auto trading and algorithmic preset reactionary? I mean, I have no idea. I'm just asking.
I have my speculation, but I would say it's quants if I had to guess.
I don't think anybody knows.
Okay.
My argument is that the derivatives markets this year have had a significantly larger impact into the short term movements, largely liquidations that are occurring. But we always laugh in the office because the price moves some huge amount, and then you just go on Twitter and you watch everybody try to speculate what caused it. Like, nobody knows. Nobody will ever
Nobody
know.
knows. No, it's not
it's
Mark
all-
Zuckerberg speaking on Congress that caused today's move.
I come from the history or from the background of cattle and corn. We can't always say what moves those markets either. All we can say is what type of trader is in control of the market. Is it the 5-minute speculator? Is it is it a hedger? Is it a large institution? Is it a short that's blowing out? Is it, so we still try to anticipate who's doing what, but we still don't know. It's time frames. It's what, who actually took pain. And if it is the derivatives market, that's a great thing.
Yeah.
Because shorts are what a lot of times makes the market go up.
Yeah,
And commodities move fast like that.
Oh, absolutely.
Yeah, same thing.
Interesting.
The other thing to just consider is the impact that miners in this industry have on price. So our thesis is that by far and large miners are happy to sit on their holdings as long as they can. But there is a price floor where those holdings have to be liquidated to pay operating costs of the business. And that price floor fluctuates based on each miner. And so if you go back to look at November of 18, where the price moved from about 6,000 to about 3,000 over the course of a couple hours or days, our thesis is that was miner-led. We think some of these recent movements are miner-led. And at the end of the day, that is a market participant that holds significant capacity and has a hard floor where they have to liquidate that capacity to cover operating costs. So it's just it's an interesting area to look at.
Yeah. It also, acts similar to, say, the oil market, where if the price is too low, they're not mining it. So that creates demand supply shock to help stabilize at different levels.
Yeah.
So while we're on the mining thing, I just keep hearing this term over and over, the Bitcoin halving or the halvening or whatever it is. Can anyone
Good question.
give us more information about that?
Bitcoin halvening or halving.
Yeah, so for every block that is produced in Bitcoin, that block bundles a set of transactions and is written onto the blockchain. And it includes a block reward in the block. So that reward effectively provides the miner that completed that block with Bitcoin to reward them for the energy spent to complete the transaction. That reward basically over every four years halves.
Depending on the pace.
Yeah, approximately 4 years because
Yeah.
it's at block heights versus a specific time. So that reward halves. And so in theory, the mining network, the supply that the miner now halves as well. And so the theory goes that if the supply that the network has halves, then the supply being pushed out onto the market, liquidated onto the market, is reduced, and that should bring the price up. We did research in the second quarter looking at halvings of about 23 different assets over the last 4 or 5 years or so. And we found that there was not a consistent price appreciation in conjunction with the halving. So I think it's a date and time, and it's a story that makes logical sense. Like, oh, if there's less supply, then the price should go up. But I think looking at the data, like, it doesn't tell that same story.
It's going to be more of a bear with the halvening.
No, like,
There's no
there's
correlation.
there's no correlation. Could do either.
Well, this is
And
prior.
that could come back to the actual supply. Even though they've been rewarded, it's not like that's instantaneously being liquidated.
Correct.
In most situations, so they could be holding on to it, and so it's while that supply is the reward is being halved, the supply still sits there.
Well, and the anticipation into it. You already know what's going to happen.
Right.
In commodities, we always talk about, buy the rumor, sell the fact.
Right.
Once the news is there, the happening happened. It doesn't make the market go up.
Mm-hmm.
It's already baked in. That's known news. That's what everybody already knows.
Yeah, the market prices that in ahead because it's prior knowledge. Like everybody know when every single happening is gonna happen, and exactly what the details of that is. So technically, people can anticipate ahead of that, and they can make their buy and sell trades ahead of that to anticipate for. So that makes sense. So I agree with that research.
Would one repercussion be people stop mining because it's not affordable? Or
I think
like
that's
that?
more of a function depending on the price, right? Like price go up a lot, obviously more people would want
So
to mine.
that's part of the game theory. Is where's that price and how much opportunity costs is there in going after these rewards.
I mean, at $7,400 with today's hash rate, the Antmine S9 miner is no longer. It's basically a break even with pretty inexpensive electricity. So we're right on the cusp of profitability. So that mining hash rate number is kind of an interesting number to look at as you think about growth of that mining network versus retirement of old machines versus new more efficient machines coming on the network. That it could have an impact.
And halving is like just over 200 days now, right? The next one, so it's
May of 2020.
2020. Yeah, and there's the way to look at the happening is there's an interesting model that just came out by an anonymous, basically Twitter profile, and what he was trying to do is a macro guy or a quant guy is trying to figure out how to value Bitcoin. That's the big mystery on the board. It's been on the board for a while. How do we value this new asset? And his simple strategy was to look at gold and look at okay, we've got this supply that sits out there in the market that we know about, and then we've got this inflation figure, 1 to 3% that comes in just about every year. That's from the miners around the globe, and then gold has been a steady store of value because of that, because that flow or that inflation coming in, we're not just magically going to find a whole bunch of tonnage of gold. So his theory is, well, Bitcoin can follow a similar stock to flow, where stock is the supply or the amount of Bitcoin, and flow is the actual inflation coming in. And right now, when we go through that halving event next year, that flow or that inflation is going to reduce. So we're actually going to have less supply coming in theory, and 4 years from now and 4 years from then. So if you look at 12 blah years down the road, that stock to flow continues to increase, and eventually, I think it's after this, not this halving, the 2024 halving. His theory is that Bitcoin will have a stock to flow higher, almost double the amount of gold, and that becomes super interesting. Now, this is just a model.
Yeah, so this is produced by a gentleman named Plan B on Twitter.
Yeah.
He does a bunch of great work. It's one that we've looked at pretty closely. We almost wrote our Q3 paper on this topic in particular, but we didn't. But in initial analysis, like we don't necessarily believe that model actually holds weight over the long run. It's sort of a correlation, does not necessarily equate to causation factor here. But it's an interesting one to look at for sure.
Does it depend on like loss, if you will? Because gold comes out of the commodity comes out of the market because people make jewelry or put it, they,
Well, it's an industrial metal. Also, it gets used.
right, it gets used.
Yeah.
So it's no longer a commodity. It's no longer being traded. Whereas Bitcoin, if the loss rate, I don't know what to call it. I'm also not an economist. I spend a lot of time in Bitcoin or blockchain groups saying things that I'm not. I'm not an economist. So also not an economist.
It's a very good lawyer.
Don't know the right words, but if the loss rate for Bitcoin is significantly lower than that for gold, then that model shifts significantly.
Yeah.
I keep hearing about lost Bitcoin all the time.
He.
Right. I mean, there certainly is some
I
loss,
think
right?
he tried to put that
I
in
believe
there.
that's in the model.
But he really didn't. I don't think it's clear how he put it in there. But that's another component of the supply side is loss. I mean, it just whether it's idiots that just don't know what they're doing or
buy it, die, and nobody knows you have it.
I mean, there is loss of Bitcoin there, so that's where some people say it's almost deflationary at that point.
I mean, this whole note, you can look. So Litecoin experienced the halving beginning of this year.
All right, yeah.
And so you can look at the price action there. So I don't know the raw numbers off the top of my head, but it appreciated a significant amount, over 100%, leading up to the halving.
Yeah.
And then fell an equally dramatically percent following the halving. So that's one where, again, I think people anticipated a benefit from the halving, and then as that halving actually occurred,
buy the rumor, sell the news.
Yeah.
Buy the rumor, sell the news.
And you get into these arguments, like you post this type of research on Twitter, you get into these arguments where people say, well, Bitcoin is significantly different than Litecoin or than any of the other coins in the marketplace. Like, that was the number one criticism that we received in the piece that we produced. I mean, it is different in that it is the oldest network in existence in this industry. But outside of that,
I don't think I'm subscribed to your pieces. I need to do that.
Become an investor.
They're on the blog. That one's on the blog.
Do that. Not to sell.
I don't think, me personally, I don't think Bitcoin price, I mean, there's some correlation to supply of the Bitcoin, definitely, but I don't think Bitcoin price in the long run will have anything much to do with its actual supply. I think it has more to do with how the market uses it, and how is it being adopted. Let's go back to gold, right? Gold in 1970 was less than $100 per ounce, I believe. Maybe less than 200, just so I get my numbers kind of general out there. From that time until now, it has gone from yay much to about $1,500 an ounce. Gold production worldwide at that time actually went up too. So we have more supply flow coming in, and the price of gold also went up. So can you say that it's supply driven? It doesn't sound intuitive.
What's the other half of that?
I'm sorry?
What's the other half of that?
The other half of
Supply of something else.
I'm sorry?
You're pricing it in dollars.
Yes.
So what happened to the supply of dollars?
During that time, they so the U.S. dollar went off the gold standard completely, right? Thanks to Nixon.
1971.
Yep.
Not a coincidence.
Within that time, and ever since then, starting in 2000 and so on and so forth, we have a ton of quantitative easing and a lot of money printing. So price of gold went up, even though production went up, right? So there's a lot of factors, economic factors, that goes into the price, potentially that can go into the price of a commodity. In this case, Bitcoin behaved very similarly to a commodity, and it has similar feature to gold, which is a commodity. So
that's why Dennis Gartman always talks about gold only in relation to oil.
I see.
So that's his stable coin.
Nobody uses Bitcoin though. That's to me, the price goes up when there are more buyers than sellers, and the price goes down when there are more sellers than buyers.
Exactly.
It's as simple as that.
Chain Analysis did some data the first half of the year through, I think, April or May. Last year was 91%, was basically, bought and sold on exchanges. Now it's 89%. So you still have that 90% of Bitcoin usage is speculation.
That's entirely.
So until that 90% becomes 40, and we've got another use for Bitcoin, and it actually hones in on a store of value or medium exchange, I think we still have this speculative thing. I mean, I can just look back at 20 years and say that society's gotten more instant gratification is become, the thing, whether it's money or your social media and the likes you get or the notifications you get on the phone. All we're doing is training ourselves every day for those dopamines that we need. So, I just, until we move away from this, it's all this price talk. I don't know, but the price talk is always going to be there. If we don't have the higher price in Bitcoin, if Bitcoin fails, what does the rest of the space look like?
I mean,
So what you're saying is it's really not that gold is going up, but U.S. dollars has gone down significantly. So
Through inflation.
going back to Bitcoin, was always compared against U.S. dollars. Is there a better thing like oil to gold as
Big
something
Mac.
to Bitcoin?
I haven't thought that through yet.
it's an
I'll think about it.
The Big Mac.
The big market.
It's an interesting
Well,
question.
yeah, that is an
It's a good
interesting question. I mean, all we talk about is in dollars.
Yeah.
And yeah, not when you have relationship between two things, it's not always the thing you're looking at that's changed value. Sometimes it's the one you're pricing it in.
We have that, you have the big drawdowns like today. We have, every once in a while you get a client that calls up and they're a little nervous and the value of my Bitcoin just went down. And I'll ask some question, what's your Bitcoin balance right now? Has it changed? Well, no. Okay. So just that perception of that value in dollars terms. But it's still
Bitcoin to Bitcoin only.
when people refer to how much Bitcoin I have, they always refer to how many dollars I have or what percentage of my portfolio is in Bitcoin. We never talk about how much Bitcoin we actually have. And I think until that conversation or that narrative shifts a little bit, it's going to be this speculative environment based
I try
on
to do that with EOS is compare it to Bitcoin versus just, and dollar.
well, nobody nowadays talk about how much is that worth in gold anymore, right? People still buy gold. People still hold gold. Do they transact in gold? No, but they hold onto it as a store of value and as potentially as a form of investment. I think they should just hold on to it as a store of value and not an investment at all. But that's just my personal opinion. So, Bitcoin could be like that one day. Maybe people don't even use it at all, because it's slow. It's more expensive than Ethereum and other cheaper type of crypto that's out there. But because it's first, it's the most popular. There's a lot of Bitcoin miners more than everybody else, right? So maybe, just maybe, it will potentially one day be a good form of a good store of value. Maybe not a good form of payment, or maybe not a good form of investment, but store of value wise, it could be, it could still retain that function. Who knows? Or it could all go to zero one day because better and superior cryptocurrency comes out, or quantum computing decimate crypto. Who knows?
It could be MySpace.
Or they
It
work
could be
together.
Friendster.
Well, they're still going like MySpace, yeah. It's like still kicking.
I mean, that's what makes me. It's pretty interesting to think about Bitcoin maximalism and be like going back to 2000. Be like, I'm going to put 70% of my portfolio into Yahoo because that is the dominant search engine. Yeah, just because it's first and it's been around for a long time.
Yeah.
I mean, it's a great technology and it's the sort of the grandfather of this entire asset class. But
It sounds like a good idea. But
I had this discussion with my mom just the other day because she was like, will you tell me when one of your clients is going public so I can invest because I don't want to miss the next Yahoo. I was like, Mom, if you had invested back in the tech boom in the late 90s, what are the odds that you would have picked Facebook? Like literally, I'm not because she's dumb or anything, but what are the odds that anybody picked Facebook over any of the other offerings at the time? Or, what are the odds
It
that
might have bought
people,
WeWork.
What, right.
How
What
many
are the odds that
Sorry.
people picked VHS over Betamax? Betamax is the better technology, so why would you have chosen VHS?
Pets.com.
Yeah, exactly. So,
Well, I mean, you could have bought Amazon in the 90s, and there's only 3 people that still own Amazon from the 90s.
but
And that's Jeff and his
my
parents.
point was that, it's still a guessing game. Just because it's good technology, just because it's a leading technology, and just because you're in early, it's not a guarantee that you're going to become an Amazon millionaire or Facebook millionaire or any of those other early adopters. You might have picked Betamax with all invested intentions.
That's why you diversify.
You might have picked AOL and held on to it too long. I mean, it's still crapshoot.
And to compare it to the internet, you could also correlate it to be 300 baud modem Bitcoin. We need, it's not very useful anymore.
Hey, so we're coming on time here, and I want to be respectful of everyone's time. I really appreciate everyone coming. I feel like there might be a need and an opportunity for everyone in the room to create some sort of like regularly occurring, maybe monthly crypto center of experts where people can come and ask questions, but then we can also trade notes around the table around what's going on in crypto and bring more people to the table, like, policymakers that want to learn about crypto, because crypto is this very taboo topic, but there's a lot of good conversation that happened today. What do you guys think?
Yeah.
I'm very supportive. It's a great idea.
And then I know there's a lot of crypto meetups, but we don't really get to see like the guys that are doing this day in, day out all the time. So it'd be really great to give the community access to the guys that are thinking about this all the time, right?
Yeah, absolutely.
Living
Right.
and dying by it,
Yeah, yeah.
paying their mortgages with it.
If with that opportunity, I'm gonna just try and set up a monthly one and invite everybody again to come again next month. And we can think about like if this is the best place or the best time, but it seems to be working for at least those that showed up, and then we can kind of go from there. Does that sound good?
Absolutely.
Yes.
Cool. Thank you. And we can make crypto a nice, safe place for us to share, right?
Yay.
Eat pizza, Bitcoin pizza. Thanks for coming, and then let me know if there's any questions.
you, Harry.
If I can-
Thank you, Harry.